Hello and welcome back to my YouTube channel. So today we'll continue and we'll start a new chapter. I'll be doing question for the August 2025 sitting. Yeah, and this question was tested in the morning and I'm doing it here in the evening. Yeah, so welcome back. So let me read the question. I'll start with question 24. The following balances were extracted from the books of Limau Limited, a medium-sized entity as at 30th June 2025. Yeah, so we have from land at cost all the way to discount received. Then additional information, number one, we are told that inventories as at 30th June 2025 were valued at shillings 56 million. Yeah, so the shillings are there in thousands. Yeah, they're in thousands. So I'll capture that 56,000. Depreciation, number two, depreciation and amortization are to be provided the cost of the assets at the following rates. Yeah, so whenever you hear that the depreciation are at cost, on cost, then it means that that's a straight line basis. So you take 2%, you calculate 2% times the value of the building at cost, which is 80, to get the depreciation for the year. Then for fixture and fittings, it was 10%. So I'll take that 10% and I'll multiply by the fixture and fittings at cost, this value here, 64. And then lastly, we have amortization, yeah? So we'll amortize the software, you don't depreciate it. So you take 20% times the software license, you see that software license there, 16,000, get that value. Yeah, so those are the depreciation and amortization for the year. Number three, land is to be revalued upwards by shillings 5 million as of 30th June 2025. So the amount is 5,000. Yeah, that's what is important at this point. You capture that. The expected credit loss as at 30th June 2025 was estimated at shillings 2.4 million. So we'll have 2,400 as the expected credit loss at the end of the year. Then 5, operating expenses prepaid at the year end amounted to shillings 400,000. So I'll capture that 400. While unpaid administrative expenses were shillings 700,000. So I'll not put 700 there. The company estimate tax for the year at shillings 9.5 million. So I'll just write here 9,500. Yeah, because there's the shillings are in thousands. So required, the audit schedules showing trial balance before adjustment, trial balance after adjustment, profit or loss items, and the statement of financial position items. Yeah. So straight away, I'll create a draft trial balance here because that's what we are starting with. This is a draft trial balance. So it will have the debit and the credit side. Then we'll have the adjustments. Do the adjustments. We'll also have the same items, the debit and the credit side. Then we'll have what here? We'll have the profit or loss items. It's profit or loss items. Yeah, also they're supposed to have the same arrangements. I'll just drag from here. Then lastly, we'll have what we call the statement of financial position items. Statement of financial position items. Yeah, so it will also have the same DRCR. Okay. Yeah. So the shillings were in thousands, so you also master that. So the shillings were not in thousands. Okay, so after that you drag, it will copy all the way. Sorry, let me undo that. Let me copy it here also. Yeah, now it will capture. Yeah, that's okay. So we have a draft trial balance with the debit, credit side, adjustment, debit, credit side, profit or loss items, debit, credit, statement of financial position items, debit, credit. Yeah, so what is remaining is what we are working with. Yeah, so I'll copy this land and cost, all these items here. Up to discount received, shall say Control C. Then I'll come here. I'll say Control V to paste. Yeah, it makes my work easier. So I'll start with the draft trial balance. Yeah, and the draft trial balance I relies on the values given on provided up there. Yeah. Yeah, so I start a land at cost. Land at cost. That's land is an asset, so I'll debit it on the trial balance. Yeah. Then the second one is building at cost. I'll also debit it, so I'll just drag. Then the third one is accumulated depreciation. That's a liability, so you'll credit it. That 5. The other item, furniture and fittings, that's an asset, so you debit. Accumulated depreciation for that is a liability, so you credit. Yeah, the accumulated depreciation for fixtures and fittings, 25,600. Then you have inventory as at 1st July. Those are assets, so you debit. What is it? This one. 42. Then you have other operating expenses. Those are expenses. So you can see we have other operating expenses, administrative cost, selling and distribution. Those are expenses. Credit loss expenses, dividend paid expenses, tax paid. Sorry, we continue. So I was explaining that now we realize that from inventories all the way to tax paid, they are all expenses. So they're supposed to be on the debit side. So at that point, I'll just drag up to tax paid, and the values will be captured automatically. So you go to return profit as at 1st July 2024. That's an equity. So you pick it. Or is it this one? 29. Then you have software license. That's an asset. So you debit it. 16,000. Bank overdraft liability, you credit. And realize that from bank overdraft, ordinary shares, 8% preference shares, share premium, those are all equity. Then they are on the credit side. Share premium, 6% loan, those are all liability on the credit side. And trade payable is also on the credit side. So once I pick the value for bank overdraft, I'll drag all the way to trade payables, to copy everything there. So that's 2,500. So I'll drag it. Yeah, these other items that follow up to 2,800. This is for trade receivables now here. So up to trade payable. Those are the credit side. Then trade receivable as an asset, so we debit it. Trade receivables. Then you have the expected credit loss. That's allowance for doubtful debts. So that's we credit that. We credit that allowance. Then we also do the same to sales. Sales we also credit because it's income. That's revenue. Purchases we debit. We debit purchases. To 114, you enter. The discount allowed is an expense on our side, so you credit it. So that's why I have you debit, sorry. Then you credit the discount received because it's an income. Yeah, and just like that, we are done with the trial balance. The draft, sorry. Yeah, so we are going to add all this. We are going to sum the debit and credit side and see if they balance because they have to balance. And before we do that, we'll create spaces down here based on the adjustments. Yeah, and I can see the adjustment as 6. Yeah, we continue. So I've said that you look at the number, my students, you look at the number of the additional information when you're doing audit schedule. Yeah, and there are 6. So I'll create a space for almost 10. Yeah, so from 83 all the way to 92, I think will be okay. Yeah. Yeah, so I'll drag. When I'm summing up, I'll drag from here up to 92 there. Yeah. So when I auto sum, it will give me that value. Then I drag. Yeah, so when I drag, I'll just drag all the way. No, sorry, let me undo that. Let me undo that. So I'll drag here. What's wrong with this? Let me undo that. Yeah, so once you get that value, you just drag and see if they balance. As you can see, they're balancing at 723,000, 723,000. And because I want this format to copy, I'll just drag the formula up to the statement of financial position items. Yeah, it will be able to assist us. Yeah, as you do the entries, you realize that you will be able to check yourself. Yeah, so this space is for the adjustment. So we are done with the draftable balance, and it is balancing at 723,000, 723,000. So we go to adjustment. So adjustment are found under additional information. Yeah, so first we have inventory as of 30th June 2025 were valued at shillings 56,000. So that's not an adjustment. So we won't include it, but we'll use it. Yeah, so number 2, depreciation and amortization are to be provided the cost of the assets at the following rates. We have calculated the depreciations. Yeah, so depreciation is an expense. So we'll come here and say depreciation. The first one is buildings. Yeah, so depreciation, that's an expense. So we'll debit. And you can see where my cursor is. So we debit under adjustment. Yes, we debit with the amount. It was 1,600. Yeah, and which account do we credit? We credit the accumulated depreciation account where we have buildings. Yeah, so credit accumulated depreciation. See this account, accumulated depreciation of building as of 1st July. So we will credit that account there with the same amount, 1,600. So you select that amount there. Yeah? Don't copy this other one. Yeah, the one you have selected first. And you can check here, it's balancing 1,600, 1,600. Yeah, okay. So we continue. The other depreciation was for fixtures, fixtures and fittings. So you come here again and say depreciation for fixtures. We also debit it. We'll debit it there. The amount is 6,400. Then you credit the accumulated depreciation on fixture and what? And fittings. So you go to accumulate depreciation and fixtures and fittings. It's there. Yeah, so you will credit that account with the same amount, which is 6,400. We continue. We continue. The other one is software. So we'll look at the amortization. Say that you don't depreciate software. Amortization. And you say software. Yeah, so you debit that amortization being an expense. Debit it here. Is it? Yeah, that 32. Yeah, then you'll credit the accumulated amortization account. Yeah, accumulated amortization. Yeah, but for software. Yes, you credit that account here with the same amount for amortization, which is 3,000. Where was it? 3,200. Yeah. And you observe if they're balancing. We are done. We are done with that. We go to 3. Number 3, land is to be revalued upwards by shillings 5 million as of 30th June 2025. Yeah. So yeah, we debit the land account. Land at cost, we debit under adjustment. With how much? How much? With 5,000. Yeah, so you debit with 5,000. Then you create the revaluation account. Sorry, I have some flu. Revaluation reserve. Yeah, reserve. Let me say revaluation reserve. Yes, you credit the revaluation reserve account here with the same amount, which is 5,000. So you go and pick that 5,000. You're done with that. Number 4, the expected credit loss as 30th June 2025 was estimated at shillings 2.4 million. Yeah, so there was an increase. So you'll debit the expected credit loss account with the 2,400. This one, no? Yeah, you debit there with the amount 2,400. There will be an increase, and we are told that within the in October. That means that 6 months ago before we close, it was at 1,800. So it means that this 2,400 is just an increase. Yeah, so that 1,800 is part of it. So I'll show you what to do once we are done with that. Yeah, so you debit the expected credit loss account and the credit which account? Trade receivables account. Yeah, because the credit loss effect reduces the trade receivable account. Yeah, so you will credit that account with the same amount, 2,400. Yeah, trade receivables. And run down there to see if you are balancing, and there's no changes on these items. Yeah, because some students will put this adjustment somewhere, not just because they don't know, but because of the tension of the examination and also not being accurate. Yeah. So you see, when I did that double entry, if I was able to now to put it here or put two values on the credit side, it won't balance. I will see down here that is not balancing, yet I've done two transaction. Yeah, so you are quick to go and check what is the problem. Okay. Yeah, so we are at revaluation. Sorry, we are at expected credit loss. Yeah, so we have captured that value the way it's supposed to be. We continue. Number 5, operating expenses prepaid at the year end amounted to shillings 400,000. So I'll stop there. So there was a prepayment of what? Operating expense. You start with the prepayment. So you create an account for prepayment. Prepayment is an asset. It is an asset. So we'll debit it. Debit the amount, which is 400. There. You select, right? It makes your work easier once you analyze the question. Then you debit what? It was talking about, sorry, you credit what? The operating expenses account. Yes, you go to other operating expenses account here, and you credit with the same amount, which is what? 400. So just equals 2. Then you go back and pick 400. Then you enter. Yeah, and we check whether the entries are okay. Yeah, so I've seen them at 19,000. Very well. Okay, so the other one, while unpaid administrative expenses were shilling 700,000. So when you hear anything to being unpaid, that's accruals. Yeah, so there was an accrual. So we'll open an accrual account. Accrual is a liability. Sorry. Accrual is a liability. So I'll start with that. So I'll credit it with how much? With 700. Yeah, then I'll debit what? What were they talking about? It was on administrative cost. Yeah, there was unpaid. And I saw somewhere the admin. What does that mean? Trade payable. How comes I can't see admin? Yeah, so administrative cost, it's up here, sorry. Yeah, so we'll credit it because there was an accrual. It was not paid. Sorry, we debit. Yeah, we debit that account under adjustment. Under adjustment. So I'll debit it there. 700. Yeah. Yeah, because it was an accrual. It was not paid. Yeah, but we have to pay it. That's why I've added it up there. Okay. We are done with additional information number 5. Number 6, the company estimates tax for the year at shillings 9.5 million. Yeah, so we'll debit the tax paid account, this one, tax paid account with the same amount under the adjustment. Yeah, so it was 9,500. You just go and select it. Then the double entry for this is the accrual. It was estimated, so it will accrue. It will accrue. So this accrual will adjust. So we'll add what the amount which is 9,500 for the tax. Yeah, that's the end of our adjustment. And just like that, as you see, they're balancing at 29,200. Yeah, so the next thing, we are going to profit or loss items. So you'll be very keen here. We have a draft and adjustment. So whenever adjustments are in any item that adjustments are in, we'll have to adjust. Yeah. Sorry. So we have land at cost. No, that's not an item of profit or loss. Buildings at cost. No. Accumulated depreciation. No. Fixtures and fittings. No. Accumulated depreciation of fixtures. No. Inventory as at 1st July 2024. Yes. Yeah, that's the opening inventory. Yeah, so it's an item of what? Of profit or loss. So I'll just come here and click that and see if it merged with the row. Yeah, so row 61. So there was no adjustment. You can see it's on the debit side and there was no adjustment. So you just take that 42, you enter. Other operating expenses. Yeah, those are items of what? Of profit or loss expenses. So you can see from other operating, administrative, selling and distribution, credit loss, dividends paid, and tax paid, all these are on the debit side there because they are expenses. Yeah, so I'll drag up to, I'll drag up to, sorry, there are adjustments there. Yeah, so let me just do it. Other operating expenses. So yeah, let me just do it the right way, not drag. Yeah, because I leave some values out. Yeah, so we have 42. That's okay for inventory. Other operating expenses are on the debit side. So you say equals to this 13,000, but there was an adjustment. When you look at the adjustment, it's on the credit side. So you subtract, it reduces that amount. So you subtract 400. Okay, yeah, the 400 will reduce. Yeah, that was the prepayment. Yeah, so you have to reduce that. You have to deduct that prepayment. Good. Yeah, then administrative cost, the same. It's on the debit side. So you say equals to, then you pick this value. Then you look at the adjustment. Adjustment is on the debit side, yeah? So you add because they all fall on the same side. I'm struggling. That's okay. Then selling and distribution, you debit again. Credit loss, there was no adjustment, you debit because those are items of what? Of profit or loss. Yeah, that's what I'm working on. Dividends paid, no adjustment. Even up to that. Then when it comes to tax paid, there's an adjustment. Yes, we'll have 6,500 on the debit side and another 9,500 on the debit side. So it increased the tax paid. Yeah, so that's 16. And I hope when I was doing the analysis, the profit or loss items, I hope they factored in all the adjustments. Yeah. Okay, so we go to next, return profit. No, that's an equity, software license, an asset, bank overdraft, equity, ordinary shares, 8% preference, share premium, 6% loan, trade payable, trade receivables, no. Expected credit loss, no. Sales, yeah, yes, yeah. So sales is on the credit side, is an item of what? Of profit or loss. Tunaanzanga na revenue huko juu. Yeah, that's what they're testing. So we take that for it on the credit side. The purchases, yes. Purchases, yes, on this side. It is 414. You debit. Then a discount allowed. Yeah, that's an expense. So you'll debit it. There was no adjustment there. Then that was a discount allowed. Then no discount received. This is an is it an income? So I'll put this on the side, credit side. Yeah, there was no any adjustment to its name. Then depreciation. Yeah, that is an depreciation and amortization. All those are items of profit or loss. So they will be on the debit side because those are expenses. So I'll pick this, then I drag for the two. 1, 2, up to amortization. Accumulated depreciation is not an item of profit or loss. Then revaluation reserve, no. Prepayment, no. Accruals, accruals also, no. Yeah. So the other item that we are going to have here is now the closing inventory. Because closing inventory is an item of profit or loss. When we are calculating the cost of sales, yeah, we always say opening inventory plus purchases less what? Closing inventory. And that now being less, the closing inventory will go now to the credit side. Yeah, so we'll say equals to, then you go back and pick it where we had additional information number 1. Yeah, pick that value. It was 56,000 if I'm not wrong. Yeah, this one. Yeah, so we'll put it on the credit side. Okay. Yeah, so we have done that. So I say that when the credit side is more than what? The debit side, then we have a profit. Yeah, so we have a profit. So what will be our profit? Yeah, because you can see the credit side is having 549,000. This other side 531,000. Yeah, so therefore our profit for the year. Yeah, and you can see the spaces I left. It's like I've used them all. Yeah, it's like I've used them all. Yeah, so we will calculate the profit. So the profit will be here, yeah, on the debit side. We are going to have the profit on the debit side. So just equals to, just pick the values. Yeah, you can see 549. Take 549,000. You subtract 531,000. This value here. Yeah. So I'm not because if you pick them, then it will dislodge the question. Yeah. So I'll just take that. Then I say 531,000. There's 531,000. Then I enter. Yeah, yes. Tell you, do you want to accept this correction? Yes. Yeah, so we have a profit of how much? Of 18,000. So it has balance. This also, it balances because of the profit at 549,000 and 549,000. So I'll do the same. I'm done with that. So I'll go to the statement of financial positions items. I'll start with the land at cost. Yeah, and land is on the debit side. You look at the original trial balance, the draft. Yeah, so land was there. So, but I can see there's adjustment. So on the debit side, there was 20. Then the adjustment of 5,000 was also on the debit side. So I'll add it. I'll add it there. Then building at cost, there was no adjustment. So I'll just put it the way it is. 80,000 building at cost. Accumulated depreciation on building as at 1st July. So that will be on the credit side. And there's adjustments. So take 5,000 on the credit side. And even the adjustment is on the credit side. So you add those two. You get 6,600. Fixture and fittings at cost. Yeah, there was an adjustment. Yeah, that I hope I'm there. Yes, we pick that 64 on the debit side. Then accumulated depreciation for fixtures and fittings. That's on the credit side. So we'll have 25,600 plus 6,400. Yeah, because it was an adjustment. Yeah, these adjustments are coming from those depreciation for the year. I hope you recall. Yeah, I hope you are recalling that. Then inventory as of 1st July, no. No. Other operating expenses, no. Admin, no. Selling and distribution, no. Credit loss, no. Dividends paid, no. Tax paid, no. Retained profit as at 1st July, yeah. So this was the retained profit carried forward, but it's now going to have an adjustment. First, it's supposed to be on the credit side. This credit side, yeah, because it's an equity. So we'll take 29,000. That was the retained profit brought forward, yeah, or brought down. So we'll add it to the profit for the year. Yeah, we'll add it to our profit for the year, which is 18,000. This one. Yeah, so we'll add it to that, and you enter. You get that. Then software license. Software is an asset, intangible asset, so we'll debit it. Debit it there. We'll debit that. Yeah, you ensure that I capture everything. No. Yes, 16,000. Ordinary share capital, those are equity. So just capital. And you can see it's ordinary share capital all the way to trade payables, and there was no adjustment here. So once I pick, sorry. Yeah, I am at bank overdraft. Yeah, so I'll pick that and enter. And there was no any adjustment. Yeah, so I'll drag those other items that falls on the credit side up to trade payable. To trade payable. Yeah, to trade payable. So I'll drag, get there. So 2,800. That's okay. Up to trade payable. Yeah, you know why? The reason is that from ordinary share, it prefers those are equity and they're on the credit side, and even liabilities. Yeah, so I'll jump. I'll go to trade receivable. Sorry, jump. So trade receivable, we debit. So how do we debit? So we will pick 33,000. There was an adjustment. Debit side, where was the adjustment falling? Sorry for that, on the credit side. Yeah, so it means that it will reduce. Yeah, so we take 33,000 minus 2,000 what? 400. 3,600. Good. Continue. Expected credit loss as at 1st October. You can see it was at 1,800. Then it increased to what? To 2,400. So the difference, yeah, that increase will debit it. The increase on allowance of bad debts. Yeah, so you just take 2,400. You deduct 1,800 to get the increase. Yeah, so that 600 will be on the debit side. Okay. So the next item is sales. No. Purchases. No. Discount allowed. No. Discount received. No. Depreciation. No. Amortization. No. Accumulated amortization for software. Yes. So we'll credit it. Yeah, because it's an item of yeah. So we'll have that 3,200. Revaluation reserve also. You credit. So I'll just drag because they follow each other. Prepayment. You debit. Debit prepayment. That prepayment. Yeah, it was 400. So you debit it. There was an adjustment to it. Actually, it was an adjustment. Then accruals. Accruals 10,200. You credit. Then closing inventory will be the last. Sorry, accruals was how much? 10,500. Yeah, so the closing inventory was 56,000. So that's an asset. So we'll debit it here. The 56,000. Yeah, you debit it here. How is it? Yeah, so you debit it there and you enter. So that's the end of it. Yeah, the question balance at 276,600 to 70. Sorry, 272,600 to 72,600. And that's how you get your 20 marks. Yeah. That's how you get your free 20 marks. You don't even have to bother. You don't even have to bother. Yeah, so thank you so much. Until next time, let me say bye-bye. And at this point, I also wish you all the best in your exam. Yeah, that you pass and move to the next level. So our intake for December is already is on. So you can reach me out wherever you are through my number on the bio. So thank you so much and have a blessed evening.